Hello everyone, welcome back to Just Invest Today. In today's video, we are reacting to an Alibaba video about the undervaluation of the company at this point because it's getting out of hand. Thomas Hayes makes an amazing presentation on Alibaba and basically why this stock will shoot right back up to 300, probably past 300 eventually. So let's listen to what he has to say. But before we do, like and subscribe to my channel. Before we get into this video, I actually bought more Alibaba at these prices. It's trading at around $87 and I think it's just super cheap, and he's going to explain exactly why I'm buying and why I have extreme faith in the future of Alibaba and its business.
Okay, my favorite one, Alibaba. So I've never seen a situation where the price was so disconnected from the fundamentals for such a high quality business that had a meaningful moat. This reminds me of Microsoft in 2013 before it took off on a historic run. So everyone knows Microsoft. Well, Microsoft went through a period after the antitrust stuff where it basically traded sideways for most of the 2000s. The interesting thing about that sideways period, the stock did nothing.
And we can literally say the same thing for Alibaba stock. From 2014 till 2023, the stock is actually down, which is insane. The market is basically telling you that Alibaba has had no growth since 2014, even though the revenue is up almost 800+%. Can you believe that? Can you imagine owning some real estate or owning a farm where the revenue with the cash flows are up 800%? Someone's trying to offer you the same price as you bought it back in 2014 now? That would be incredibly insane. You wouldn't even take that deal. That's what's happening in the market right now. That's why we can guarantee the intrinsic value of Alibaba is way higher than the price it's giving to you right now.
Okay? So you're saying, wow, they must have had a rough patch. Sales must have been kind of flattish. Bomber missed mobile. Like, how could you miss mobile? He didn't get mobile right. He didn't get anything right. Except, over the 7 years when the stock price did nothing from 2006 to 2013, revenues were up 112%. That's in 7 years, 112%. It's not the fastest growing company in the world, but you wouldn't have thought. Huge Microsoft, 112%. Cash flow per share was up 193%. 7-year period. Stock price did nothing. Actually, this is the period. Stock price did nothing. Cash flows up 200%.
So Microsoft cash flows were up 200% in that time span, but it didn't matter. The stock price went nowhere. And I'm happy with Alibaba and I'm happy holding it because they're buying back their shares at these cheap prices. They're returning our capital back to their shareholders, knowing that their own stock is very undervalued. So I'm actually happy that the stock prices are cheap because they're going to continue generating earnings. They generated $11 billion of free cash flow in one quarter. So if they keep doing what they're doing, returning cash, buying back shares, maybe kind of hopefully giving out a special dividend, maybe who knows what they do. But as long as they keep buying back their shares at these cheap prices and they continue their earnings growth, the company has to follow the earnings eventually. It may take 2 years, 3 years, 4 years, 5 years, might be next week, who knows, but it's gonna eventually follow the earnings.
So it's kind of like a balloon submerged underwater. You can hold it down so long, but eventually price catches up with earnings power and cash flow. It's just an economic arbitrage. And what happened here over the next 7 years, Microsoft returned 1,500%, which was a CAGR of 36% a year since 2013 when I wrote this. It may be even up more. So
look what happened to Microsoft after it broke through that 2015, 2016. It went crazy. It went up, what, 480% over the next 5 years? Man, Baba is going to do the same. Baba is going to go up 200, 300, 400% just to get to near intrinsic value of the company. It's going to do that eventually, but we just have to be patient and just wait for the whole kind of economic sphere of China's bad, China this, China that, to kind of get over that overhang. Because it's just crazy how we're seeing with BYD. No one cares about China. No one cares about this Chinese discount. I do not understand why no one cares about this BYD China discount. It's trading at 55 times earnings or whatever crazy price BYD is trading for at this moment. But there's no China discount like Alibaba, like Tencent. When Tencent is obviously a more dominant business than BYD, but no one cares that BYD is in China. I literally don't understand that. If someone can explain that to me, leave a comment down below because I cannot fathom that all of these Chinese companies get discounts besides BYD? It's just so interesting to me.
This is a better example. This period from this period from this period, stock price did 0, revenue's up 100, cash flow up 193, earning. So you see the levels of this euphoria, despondency. Where were we here? Despondency, right? No movement in price, huge movement in economics. By the way, over the next 7 years, when the stock went up 1,500%, the growth rate collapsed relative to this. So the market's a discounting mechanism, okay? And it worked on a lag basis, and that's that. So Satya Nadella is given a lot of credit, but don't underestimate what Ballmer created before Satya took the reins. Ballmer laid the groundwork, Satya took the reins. That's why people say, like, oh, when Republicans are in power, the market does worse, and when Democrats are in power, or vice versa. Look at what foundations were laid the 4 years before. Well, first off, I don't think politics ultimately has that much to do with the market. Although everyone thinks it and trades on it, fundamentally, all that matters is this. These are the numbers that make the stocks do this, okay? Now, why am I spending so much time on Microsoft? Because, got it? It reminds me a lot of Alibaba. So for the last 7 years, here's where we're at. This is a little bit old, but it's the same price basically. It's traded between 100 and 120 for the last, since June, give or take. Okay, and basically from IPO to 2022, revenues are up 894%. Cash flow per share is up 559%. Earnings per share up 600%. Share price is up 0%.
So if you heard those numbers, revenue up 800%, cash flow per share up 550%, earnings per share up more than 600%. If someone gave you a blindfold and told you, what would the stock price be, or how high would the stock price go up since IPO until 2023? You would probably say, like, damn, this stock probably did so well in the market. It returned a lot of cash back to you. It did amazing. But no, this stock did 0% growth in the market. It didn't go up, nothing. And that is Alibaba for you. That just shows you the strength of auction-driven markets and how you just can't follow these auction-driven markets, and you have to put your own value into these companies, because that is not the true value of the company if you just use your common sense in this time.
Okay, very much like what you saw with Microsoft. Now you can say, but politics. Why do you think Microsoft was trading so subdued? But politics, right? Antitrust, they got off track. People were worried about government regulation. They had to fight that whole thing out from 2000 to 2005. Same exact situation now. The difference is the politics have shifted in the last 3 months. And for the first time in history, the Chinese government has said, we usually re-stimulate an economy through infrastructure investment. This time we're going to do it a little different. We're going to put all of the stimulus into consumption. And what Alibaba is a toll taker. If you're going to consume anything in China, you're going to pay a toll, like to get over the Brooklyn Bridge doesn't have a toll, but the George Washington Bridge, I grew up in Jersey, has a toll. And all the consumption that's going to be done in China over the next 2 years, and by the way, the government set a 5% GDP target for this year, I think that's conservative now with the opening, is going to come through Alibaba. So all the foundation that has been laid over the last 7 years with no benefit to the owners, as this goes into the next phase, I think we're going to see a monster benefit for the owners moving forward.
So tell me what you think about this video. Microsoft having the same problems with the anti-monopoly regulation that it had during that time span where the stock price was so down because of it. Alibaba is dealing with the same situation, the anti-monopoly effects that it had on the stock price, plus this whole China USA. People don't want to invest in China because they're afraid. So guys, what do you think about this whole video? Like it and subscribe to my channel. Peace.